Thanks for joining us for today's episode of The Capitalist Investor. As always, you got Mark and D.
Mark, what's up, man? How you doing?
What's up, buddy? I'm glad to be back in the office. I listened to our last podcast, and it kind of sucked. I didn't like doing it on Zoom. I mean, the content was good.
Yep.
But I got to tell you, it is much better to be in a studio with some professional recording equipment here.
It is very nice.
You know?
Very nice.
Beats the heck out of doing it over Zoom. So it's good to be back. And I think we got a fun show planned for today.
Absolutely.
D, I know you and I are both big fans of Dave Portnoy.
Yep.
From Barstool Sports.
Mm-hmm.
And I absolutely love watching his pizza rating videos.
You watch them?
It's amazing. I mean, they're like 4 or 5 minutes long for him to eat a piece of pizza, give a rating.
Yep.
But I was just watching one earlier. He was walking around Temple's campus. He's talking about the different buildings he sees, and they're fun, man. What's the rule?
One bite. Everyone
one
knows.
bite.
Everyone knows
But
rules.
he eats the whole piece.
That's the joke.
He eats the whole piece every time. So look, I want to do the pizza rating thing on stocks.
All right.
So let's apply the pizza rating system to stocks, and because we only have 20 minutes or so to get through a whole show, we're not going to be able to do individual stocks.
Right.
So maybe let's just pick like industries and sectors. And we'll kind of go through, we'll take turns, and let's give them some ratings.
All right.
You ready for this?
I'm ready.
All right. And you throw the first one out.
All right. I'll throw the first one out. And just so everyone knows, Portnoy, he's basically kind of making up the ratings as he goes.
Yeah. Well, we're going to do the same thing.
So we're going to do the same thing with, decimal points and all that good stuff.
Yeah.
But it is a 1 to 10 scale.
1 to 10. All right.
So I'm going to start at the top of your list, and I'm going to go cloud stocks.
Cloud stocks. All right. So we're going to throw into that category stocks like NVIDIA, Microsoft, Zoom, Adobe, DocuSign, right? Because obviously more and more businesses are doing business in the cloud. They're doing business virtually. And D, we're at the point right now where, as we're recording this, earlier in the week, a lot of these stocks started selling off.
Right.
As soon as we got news of a vaccine.
Mm-hmm.
My position is I'd be buying the dip on these stocks. I think this is a trend that is a long-term trend. It's here to stay. Some of these are already rich. They're pretty pricey.
Mm-hmm.
So I'm going to use that to knock the rating down just a little bit.
Right.
But I'm going to go with an 8.4.
Okay.
I just completely made that up. But we're going to go with an 8.4 on the cloud stocks. All right, D, I'm coming right back at you with a category.
Right.
Let's go with home improvement retailers like Home Depot and Lowe's. Obviously, as we know, a lot of people spent a lot of money this year making sure their outdoor living on their houses was, beautiful,
right.
Renovating the insides of their houses since they were stuck there. What do you think about the home improvement retailers?
Well, the old saying, you buy what you know. I know Lowe's and Home Depot. Not as much anymore. A lot of my home improvement days are behind me. But, being involved in several home improvement projects, you find yourself at Lowe's or Home Depot, a couple times a week, right? So kind of like what you just said on the cloud stocks, just because there's been an announcement on a vaccine doesn't mean that's 90% effective. Doesn't necessarily mean the pandemic's immediately over. So I think you're going to get a lot of carry forward for some of these projects that people are doing. So I still like them, even at their current prices. I'm going to give home improvement stocks an 8.2.
Ooh. The arbitrary 8.4 and 8.2 as we go down the list here.
Yep.
I like it. So they are just barely not as good as cloud stocks. Cool. All right, throw one at me, dude.
All right.
Let's go.
Big tech.
Big tech. So we're talking like Microsoft, Apple, Google, Amazon, Facebook. This is going to be a shocker. I'm going to rate them a 7.1.
That's lower than I would have thought.
Yeah, I think most people would give them like a 9.0, right?
Yep.
But no, not me. I'm going to go 7.1. And I'll tell you why. I'm going to go with the 7.1 because if you look at the expected growth in 2021, earnings growth for those 5 companies, the last time I checked, it was like, I want to say 20% earnings growth. Whereas the other 995 names in the Russell 1000, which are the 1,000 biggest companies in America, they were expected to grow at 37%.
Okay.
Now, obviously, that's all probably changed. I haven't looked at that in a couple of weeks. But ballpark, the rest of the stocks are expected to grow at almost twice the pace of the Big Five. Now, what the Big Five does have going for them is quality.
Right.
You know that if they say they're going to grow by 20%, it's going to happen. Whereas with the other 995 guys, we're really not sure. So there's an element of risk there.
Yep.
So I would expect they've had great years this year. I would expect them to market perform next year or slightly outperform, which I think makes a 7.1 a very fair rating for those big tech stocks.
Yep, absolutely. I agree with that.
All right, so we're nailing it so far. We're 3 for 3. All right, man, I'm coming back at you with large cap stocks. There's always a question.
Right.
You want to be in large cap, you want to be in small cap. Large cap has been working. What do you think, man? Especially if Biden's at the helm, which as of now he kind of is.
Right.
We'll see what happens with the legal proceedings, but at least temporarily the guy's at the helm. So what would you say for large cap stocks?
So, it's hard to get away from large cap U.S. stocks. It's especially nowadays with so many people getting into the trading game.
Yep.
It seems like those are the names that people know, and those are the names that people get into, especially the more novice investors. You mentioned Biden. Biden and I expect to be a lot like the Obama presidency. Kind of a weak dollar president.
Yep, no doubt.
Which is usually good for large cap stocks.
That's good for large cap stocks. It's good for stocks that have large foreign revenue exposure.
Right.
Multinationals. So one thing I can think of specifically, D, is dividend paying stocks have just underperformed so much over the last few years.
Right.
I wonder if maybe there's an opportunity in dividend paying stocks within the large cap space.
I completely agree with that. And I think you already started to see a little bit of a shift right when that vaccine got announced. The big tech stocks that we just talked about have just run up so much, really at the peril of the typical large cap names. So I am giving the large cap stocks a 7.65.
Oh, nice. Wow. Are we going 2 decimal points?
I just made it up right now.
That's awesome. That's good. I like that. Let's add a decimal point. All right, we're going to go 7.65. I like that. I agree with you. You know what? I was thinking about this before we hopped into the studio. Dividend paying stocks, I'm pretty sure they outperformed the S&P 500 pretty much throughout all of the Obama years.
Right.
And it seems like the growthier names started to take over during the Trump years.
For sure.
I didn't really do any research into that. I didn't check it, so I'm kind of just shooting from the hip. I'm ballparking it. But I kind of think that's what happened.
Yep. And, before 2020, I know dividend stocks outpaced non-dividend payers by about 1.8% per year, I believe.
Over the long period of time.
Since forever, basically.
Almost 100 years.
So I would expect that trend to kind of reverse.
Yep.
Or reverse back to the dividend stocks.
All right, so we got 7.65 there. That rapid fire. Where are you at with small cap stocks then? You have large cap 7.65. What do you think for small cap?
I gave the small cap stock 6.25.
I agree with that.
Just basically what I said about the names that people know, the small cap stocks. A lot of people don't know those names. And again, with the change in administration, when Trump passed his tax cuts in 2017, a lot of people thought that the small cap names were going to zoom right up, and they did at the beginning, but then it kind of tapered off pretty good. So I'm just not as big into the small caps as I am to the large caps at this point in time.
I'd have to agree with that. Now that's where you find your home runs.
Absolutely.
So there's a book I just read over the weekend called Unknown Market Wizards. And it was a book that described the experiences of like 10 DIY traders who just happened to take $25,000 and turn it into $25 million over the course of a 10 or 20-year trading career.
Right.
My biggest takeaway from reading that book is every single one of them got extremely lucky in a concentrated bet or two.
Oh, yeah.
Every one of them.
Absolutely.
Now, the guys with the lesser returns, they had like algorithms and systems that they were using. But the guys who made the big bucks, they were buying micro cap stocks, stocks that are under $1 billion in market cap. And at one point, the guy he was like a 10% shareholder in one of the companies because he bought so much of the stock. So entertaining book to read, but my biggest takeaway is if you expect to take $25,000 and turn it into $25 million, it's not going to happen.
No, probably not.
There is no way to do that. And the other big takeaway from that book is every single trading system that has ever worked eventually doesn't work.
Yeah, for sure.
Every single system. So being part of a proven process is really more important, right? All right, man, throw one at me.
All right, healthcare.
All right, so healthcare is a tough one, right? Because there are certain industries within healthcare that I'm really bullish on. I'm really bullish on med tech. I'm bullish on biotech. I'm bullish on medical devices, life sciences. So I'm bullish on that kind of stuff, right? I think with the Biden presidency, which wouldn't be as bad if there is a split Congress, like we're kind of thinking is going to happen right now. But pharma companies in managed care, like United Healthcare, CVS, stuff like that, those would be under pressure. So, I got to take the good with the bad if I have to go broad healthcare. But I'm going to I think healthcare is one of my favorite sectors broadly over the course of the next few years. So I'm going to give healthcare a 7.9.
Oh, wow.
Yeah. I'm going to give it a 7.9. And it has some challenges. So that just tells you how much, if I had to break out the 3 or 4 industries that I like, those might be like an 8.8. I really like those, right? But then I'm getting dragged down by big pharma with the drug pricing wars that we're expecting, as well as the managed care as well.
Yep. Yeah, I mean, you nailed it there. For what I did, I kind of looked at the big name ETFs like the XLV, and you're right. There's just so many nuances in there.
Yeah.
Like in that, I think Johnson & Johnson is number one, holding at 9% or so.
Yeah.
But I'm with you. I like the overall healthcare sector very much. I actually gave it an 8.2.
Ooh, all right.
So just a little bit higher than you.
A little bit higher.
But I think,
I like I said, I think I would have given it an 8.8 if it wasn't being weighed down by the two industries that I think are going to be in the Biden administration's crosshairs.
Yep. No, I'm with you for sure.
Yeah. All right, good stuff. Let's move on to consumer staples. You got your Procter & Gamble's, your Kraft Heinz, Walmart. Now, these have rallied over the last few days.
Yeah.
Maybe that's because with the vaccine, it's more likely that we have a second lockdown to buy time for the vaccine to come out, and everyone ran out and bought toilet paper again. I've actually seen pictures recently that toilet paper is gone again.
Yes, I've seen them too.
That must be why consumer staples are rallying.
Like, of all the stuff that you need to get by, I don't understand how everyone landed on toilet paper.
First of all, it's not really a GI disease. I understand that's a symptom in like 30% of the people, but come on, people.
Yep. So my take on consumer staples is a lot like healthcare. There's a lot of broad names in there. Walmart. Walmart could fit into a whole bunch of different categories.
Right.
I love Walmart. I don't like actually.
Amazon could fit in here, but it's not in here, right?
And then you got companies like you mentioned, and like Pepsi and Coke and things like that. So I kind of give it a more broad brush. There's names in there that I like. What you mentioned on the lockdown, I think is very is very true and could happen. There were very few details about this vaccine when it came out. Seemed a little suspicious on the timing.
Yeah, really suspicious. I don't know if you heard what I said yesterday on TV, but I did some research on the vaccine. Kudos to one of our research resources that disseminated this paper maybe a month or two ago. Mm-hmm. This specific vaccine, while this is all good news, it needs to be stored at negative 94 degrees.
Oh, geez.
And it can only sit at a room temperature for 6 hours. So this vaccine, there are going to be administration challenges, mm-hmm. right? Because the doctor's offices, now they can't do it.
Right.
You can't go to your doctor and get it because they don't have the freezers.
Mm-hmm.
You can't go to your local Walgreens and get it done. They don't have the freezer. So it's going to require special facilities to administer this stuff. Mm-hmm. So that's something no one really told you.
Right.
Right? All right, back to consumer staples.
So consumer staples, I gave a 6.5.
Well, that's high. Good for you. All right, I'm not a big fan of consumer staples. I think they're just way too rich. Now, there's certainly companies like Walmart that we own in our dividend strategy and stuff like that. You're talking low single-digit earnings growth. You're talking PE multiples of like 25 plus. Mm-hmm. So the PEG ratios on these companies is just so ridiculous. I'm going to give consumer staples a 5.9. 5.9. They've done okay recently, but I don't think they're going to do as well over the next couple of years. I just think they're too rich.
Yep.
Unless I'm able to throw Apple in there, right? Take Apple from tech and make it a consumer staple because, we've talked about this on past shows. It's kind of a consumer staple.
Yeah, for sure.
Right? Everyone has a smartphone. Not everyone has an iPhone, but everyone has a smartphone,
right?
For the most part. If you have a flip phone, sorry. I apologize.
Can you still get flip phones?
I don't know. Remember Zoolander's flip phone? His little one?
The tiny one.
Speaking of which, the iPhone mini, I was interested in that. I heard the battery's terrible.
Oh, I'm sure. Isn't it a lower price point?
Lower price point.
Yeah.
Battery doesn't even last you the full day.
Mm-hmm.
I already have that problem right now.
Yep.
All right, it's always charging. All right, moving on from consumer staples, utilities.
All right.
Another snoozer of a sector.
Yeah. So utilities, it's just one of those that's really hard to get excited about.
Terrible. You gonna get pumped up about First Energy?
No, I'm not.
Yeah. You're basically just buying them for the yield.
Right. Which is substantial, especially.
They just don't grow them.
Right. Exactly.
Yeah.
So with that in mind, I'm going to give them, let's see what I have here, a 5.5.
Yes. You know what? I'm just going to ride that. 5.5 for me as well. I don't like them. They're boring.
Yep.
Maybe we have more of a growth tilt. We're the sectors we don't like, we're just underweight. We still own them.
Exactly.
Right? So if they're, let's just say a 10% weighting in the S&P, maybe we're at 7.5. Right. We still own them. We have to. Now, we're very selective with regards to which ones we do own. Mm-hmm. But consumer state, I can get somewhat excited about few of the names inside consumer staples. I can't get excited about anything inside utilities.
No, nothing.
Yeah, kind of goes into the next one I want to hit. I want to hit two more. I want to hit energy and travel stocks.
All right.
Energy's been another dead zone for your money.
Right.
It's been awful. Used to be like, I don't know, I think a 15% sector weighting in the S&P maybe a little over 10 years ago.
Yep.
Now it's like 2. I can't get excited about much in the energy sector.
This is probably my least favorite one on the list.
Really? All right, so where are you going to give it?
I gave it a 1.0.
Woohoo! Wow.
So you mentioned, consumer staples and utilities. We gave them lower ratings. We're still in them. We would just be underweight, right? Energy, and it's probably a broader category, but specifically the oil and gas stuff.
Yeah.
Like I'm done with it.
So I think obviously you probably include clean energy into here, which is
Right.
probably a very small percentage of the energy sector as of today. But with a Biden administration, you would expect that to pick up a little bit of steam. I think energy's so bad that it's got to get better at some point.
That's true.
So I'm going to give energy a 6.5, which
wow.
is right in line with consumer staples. I might be willing to go bottom fishing in an energy name right about now. I might be. We're underweight. In fact, I don't even know if we own an energy name right now because it's a 2% sector weighting. And if we don't own one, then we're at 0. But the yields are there. You know, the thing that sucks, D, is we were importing oil at $140 a barrel.
Right.
Now we're net exporters, and what's oil? 30, 40 bucks?
Yeah,
That doesn't make a lot of sense, man.
No.
We should have hit our oil reserves and been exporters when it was 140 bucks.
Exactly.
Not good. So I think energy has been an absolute graveyard for your money, but it's just, I mean, oil's like 35 bucks a barrel, somewhere around there. Briefly this year, it went negative.
Yep.
Because there was nowhere to hold it because supply and demand was so far out of whack. But I can't imagine oil going much lower. And with a weakening dollar, maybe it does halfway decent. Maybe it's worthy of a neutral position, right? Maybe we should be at 2.5%. Maybe I'll pick up one name. We've made the mistake in the past of having our energy exposure through MLPs.
Right.
Because the thesis has always been they pay a good yield. It's a tax-advantaged yield. But the price should not correlate with the price of a barrel of oil. And that's just a complete lie.
Right.
So we learned the hard way, unfortunately. But so you got energy at 1.0. What'd I say, 6.5?
Yep.
All right, so that's really the only one that we have differing views on. And honestly, I could probably go with a 1.0 as well. All right, I'm going to be a bit contrarian here and say it's been an awful sector, but maybe there's some light at the end of the tunnel. I still don't think it's going to be great, but I'd rather own energy than a utility. You're probably getting the same yield, right? So, all right, this one should be fun, and then we'll wrap up.
All right.
Travel stocks. So you got your airlines, you got your hotels, you got Expedia and bookings. What else is in there? I mean, we could throw restaurants in there and stuff like that, but let's stick with the travel stocks. So travel stocks have risen pretty aggressively this week, right? And obviously this will be published next week. So the week of November 9th, right after the news of the vaccine, travel stocks kind of soared. You think that's a head fake?
I think that particular response was kind of a head fake.
I think so too.
For sure. You know, it's a knee-jerk reaction, and frankly, Portnoy is the guy that kind of is the main
ringleader there
for travel stocks.
Yep.
But what I do know for 100% sure is that there is pent-up travel demand.
A lot.
Like a ton.
The issue is it is all pent-up consumer demand. There is absolutely no demand for business travel.
Yep.
And I haven't done the research. We're just kind of winging this show. I don't know what the percentage is. Is it 50-50 business travel to personal? I don't know what the ratio is, but I think these airlines, pun intended, have some serious headwinds.
Yep.
Right? I mean, they have some serious headwinds. The Jets ETF, JETS, which I think is all the airline stocks, it's down like 35% from its peak, but TSA traffic is still down 65% year over year. So those numbers really don't jive, right?
Yeah.
So what would you give travel stocks?
So a quick little search says business travelers account for 12% of airline passengers.
Oh, wow. That's surprising. I would have thought it was
surprisingly
higher.
low.
I would have thought it was at least 25 to 33%. That's, wow. Okay.
So we'll follow up with that one. That was a 20-second Google search.
Yeah,
so,
that's not official research. Those are not the official results. You cannot certify them.
Yep. We'll Make sure all the ballot counters get in there. Make sure it's all nice and legal. So yeah, we'll double check on that. But you're exactly right. And especially talking with my clients, there is going to be no business travel anytime soon.
Yeah. I mean, we're all comfortable doing business on Zoom.
Right.
I'm meeting new clients on Zoom every week. I bring on a new client via Zoom.
Right.
It's unbelievable. And I think now that people are comfortable doing business like that, it's going to make you second guess sending someone from New York to San Francisco to put a pen in someone's hand to get them to ink a deal.
Right.
I mean, we never used to do a lot of business via DocuSign, but we're doing a ton of that now.
Right.
So I think the game has changed permanently. All right, rating. Time for a rating. Travel stocks.
Travel stocks, I'm giving a 7.1.
Ooh, 7.1. So you think there's some upside potential.
That number would have been higher before this rally that we just got. So I think it's kind of dipped. So this is kind of my 6-month number, the 7.1.
Oh.
So I think we're going to, come off those highs a little bit, and then it's going to start to ramp back up earlier first quarter next year.
All right, so I would give it a 7.1 if you gave me 3 to 5 years.
Okay.
If we're going 6 months, based on where these things are trading at relative to the TSA throughput numbers, empty hotels that I see all over the place, you got New York and California with big like lockdown restrictions again, right? No more than 10 people at a house. You can have 2 people at Thanksgiving dinner, all kinds of crazy stuff like that. Over the next 6 months, I think these are going to be very volatile. I think the return potential, I think you got to wait for a pullback. You wait for a pullback, and I can get to a 7.1. I think after this most recent rally, I'm going to give them a, what number have I not used yet? We're going to go with a 5.9 over the next 6 months.
All right.
And I'm on board with the 7.1 if you give me 3 years.
All right.
I think it's going to take a little longer. I think even with this vaccine, D, there's going to be phases of people getting vaccinated, right? They're going to hit the highest risk people first, the frontline workers, all that stuff. I mean, by the time our age group gets it, it's going to be, December of 2021.
Yep.
Right? So I think it's going to take a good solid year. There is pent-up demand, dude, and you are absolutely right. I really want to go back to Vegas with you.
Vegas won't be Vegas anytime soon.
Man.
I've been doing the research on that.
You let me know as soon as you see it start to snap back, right?
All right, we'll do.
We'll go. All right, man. Anything else you want to hit on?
I want to do these pizza joints real quick before
yes,
we go.
what are our favorite pizza joints? All right, you go first. You starting in Cleveland?
Yep, I'm going to start in Cleveland.
All right.
So I'm going to start at Sweet Basil in Westlake. They do like a New York style, which is harder to get in Cleveland.
Yeah.
It's amazing. One of my clients actually pointed it to me. It's right down the road from that school we use in Westlake, Corporate College West. Sweet Basil, New York style.
Sounds delicious.
Awesome. Angelo's in Lakewood. Have you had that?
No.
This is a life-changing event.
Is it?
Yeah. It is. It's probably, in everyone's top 3.
Yep.
But Angelo's in Lakewood is amazing. It's a deep dish, quote unquote.
Ooh. Nice.
But it's not. It's kind of in between a regular and a deep dish.
Yeah.
It's awesome. Shout out to CB who turned me on to that during band practice.
During band practice, baby.
My number 1 in town is where I grew up. So I'm going Guido's in Chesterland.
Guido's, they got to make good pizza.
It's amazing. They still only take cash.
That's awesome.
The word on the street is they still make their pizzas in the same pans that they had when they opened. So these pans are like 50 years old. It's supposed to add some flavor to the crust.
That's awesome.
Yep.
They don't make things like they used to.
No.
All right, so my local joints here in Cleveland, I'm going to give you 3. So I have an affinity towards pizza shops that sell pizza by the slice. That to me is like mom and pop shop, right? The fact that they're willing to sell it by the slice, they've got a lot of conviction in their pizza. Because if you have shitty pizza, you have shitty pizza, I mean, you're going to want to sell the whole pie.
Exactly.
As soon as someone gets one bite, like they know it's bad.
That's why I really like the New York style, because that's where you can get the single slices a lot.
Yep. All right, so I'm going to go with 3. So shout out to my boy Mike Griffin. I went to high school with him. He owns Crust Tremont.
Oh, really?
Good stuff. They also have a spot downtown as well. Another one is Edison's in Tremont. I remember at 1 o'clock in the morning when I'm hitting the bars in Tremont, going to grab a slice or 2 from Edison's. Mm-hmm. I didn't remember it much when I woke up, but I know it was good at 1 o'clock in the morning. And another one that I ate quite a bit when I first graduated from college, or actually when I was still in college and working in downtown Cleveland, is Vincenza's.
Yes.
That is good stuff, dude.
That's a good one.
Right by East 4th there?
Yeah, oh yeah.
Oh, my God, that's good pizza.
Yep.
And especially since you can get it by the slice, right? I just want to hit on 2 more that aren't in Cleveland. So, as you know, I've got a place in Manhattan, right in the financial district. My favorite spot there for any of you who are New Yorkers is Joe's Pizza. Awesome stuff. There's always a line outside, people waiting to get it. For me, it's right on Fulton Street in Fidei. And there's people just waiting in line to get their pizzas. Everyone seems to get their own pie. Mm-hmm. You don't share, you get your own. And then people are loading it up with the shakers, right? The garlic and the cheese and the pepper flakes and all that stuff. Good spot there. And then my favorite spot, I vacation a lot to Newport Beach. My favorite spot out there is Gina's Pizza in Corona Del Mar. Good spot. I think their pizza's pretty decent. Yep. Any non-Cleveland places that you're fond of, D?
Yeah, I actually had to look this one up. So before our family moved to Cleveland, we lived in Buffalo. The Bocce Club in Buffalo was my local spot. A lot of people know Duff's for the wings. That's kind of the famous place. But the Bocce, it was called Bocce's back then. I guess it's now called the Bocce Club. It is absolutely unbelievably amazing pizza.
All these places make me want to go and get a pizza right now.
I saw a picture of the pizza online, and it instantly took me back.
Yeah.
Now I want one.
Have you ever tried cauliflower crust pizza?
I have.
Do you think it's actually better for you? The carbs seem extremely high.
Yep.
It seems very dense. Now, if you're on a keto or paleo diet, I think it's supposed to be keto or paleo friendly.
Yep.
But the carbs seem ridiculously high. You've tried it?
I've tried it.
I've tried it too. And
have you tried to make it?
No.
Yeah. See, I've tried to make it. It's more trouble than it's worth, in my opinion.
Yeah. Mm-hmm. I'll just buy it from someone else.
Yeah.
All right, man. Good stuff. As always, thanks for joining us. Check out the show notes. Check out the YouTube channel. Give us that 5-star review. Actually, write something. We'll send you some swag. And we will look forward to talking with you next time. Thank you.